Well, as we look towards Bitcoin testing that illustrious 100,000 mark, all the buying really kicking at the moment. We also have a look at what's happening in some of the leverage plays around that. We're talking about MicroStrategy, which is absolutely ripping at the moment. We also have a look at gold. Gold's had a bit of a reversal, but can the trend last? Obviously, a lot of the fate of that really resides on what's happening with the US dollar, and we dive deep into the FX markets as well. Now, we have just seen Nvidia's numbers dropping. We did see some initial disappointment coming through. We look at those numbers and what it means for the stocks as we look ahead towards CEO Jensen Huang's speech to the market as well, and giving his, no doubt, positive outlook and what's going on. A lot going on in financial markets and big moves being made. Let's go into them. This is the trade-off. Well, hi there, I'm Chris Weston, Head of Research here at Pepperstone, and we're joined with Blake Morrow from Forex Analytics. We were discussing, as always, the various factors that are going on in these crazy world of markets, the technical factors, the flows, the movers and shakers, and dive deep into what really is looking like the goods at the moment. So Mr. Blake Morrow coming to the programme. Blake, I've decided to call myself Mr. Chris Weston Pretty Fly for a TradFi because I seem to be talking about crypto more and more at the moment. I think it does seem to be coming up in a lot of client conversations. Maybe that means we've hit peak sentiment. Maybe we're due for reversal, but people's perception of expected returns have so far shifted that everyone's now going, I don't want these 2% returns in a month anymore. I want 8% in a day, 20%, 100% in a month, that kind of stuff. We're back to that world. People are looking at MicroStrategy, people are looking at these momentum moves in cryptos and asking whether it can last. And it's a bit of fun. Obviously, people are happy if you've got the risk tolerance. There's some big gains to be made and potentially lost as well. So, I just seem to be having more and more of these conversations with both clients and the broader media as well in terms of what people are interested in. Are you seeing that same sort of that same sort of conversational flow at the moment?
Oh, absolutely, 100%. So that means that you guys and gals need to stick around today for this show because we are pretty crypto heavy for this particular show, Chris. Wouldn't you agree with that?
I would do, mate. I just seen yesterday came out and the Hock2 lady claiming that she's now long Bitcoin. Maybe that is maybe peak sentiment, but I think it's probably worth diving into that. So let's go into Topical Thunder. Pretty glad actually. I held back. This is a family show. I held back from asking Blake to make the noise and repeat the sound, but we won't go there. Anyway, let's go into Nvidia's numbers because look, I mean, I think we saw a 5% rally into numbers yesterday. The stock was down a little bit and then sort of clawed back as the session's gone on. I think, Blake, I'm saying Jensen Huang, the CEO, is a rock star. He always tells the market exactly what they want to hear. We're saying this just before he speaks, so he could move the share price and that could move it in the after hours market. But what I saw from the numbers, Blake, was very much that the Q3 numbers that they reported were pretty good. They beat on the revenue numbers, gross margins in line, earnings per share were better. But when they looked at the guidance, they've come out with guidance for Q4 2025, which is the reporting period that they're in. They talked about 37 billion, give or take 2%. And that was, kind of like in line with the sell side were. But I think the buy side funds were, the hedge funds and whatnot were probably positioned sort of $38-39 billion. So a little bit above that. So I think in terms of their guidance for revenue for Q4, probably a little bit unders. And that's why we saw that sort of 4-5% move in the downside. And NASDAQ futures came off 80 basis points. But all the other guidance seems to be okay. And if you look at what they're talking about, Blackwell, which is the big sort of GPU, which is coming to market, what they're talking about, shipments starting in the next quarter, that ramp up going into the start of fiscal year 26, and then they're talking about demand still exceeding supply for the next three quarters. So I think it looks pretty good. I mean the customers they're seeing at the hyperscale business are still saying huge demand. So a little bit of disappointment on the Q4 guidance, but I think everything still seems to be business as usual. Cracking company. What are you thinking?
Well, I'm thinking that they are the key enabler of the age of AI in their own words. And the stock bounced right back. I mean, the stock is down. I mean, pre-market or post-market right now, it's down maybe 1%. So unfortunately, all the people that were buying vol on NVIDIA are not getting paid for this. But the stock itself is holding up. Therefore, the market's holding up. I think Jensen's obviously optimistic outlook of the AI industry is always bullish. and that optimism just, will breed probably further momentum in Nvidia stock. I mean, I was pretty convinced that we hit a boob top a couple of quarters ago.
Yeah.
but
Family show.
Here we are at new all-time highs, or near new all-time highs, and I still think Nvidia looks great, and earnings still look strong. And you're right, maybe a little bit of disappointment in forward guidance, but can you grow at these rates forever? No one can. You look at what happened with Apple.
I feel sorry for the people who bought calls yesterday, because you did so at a 96% volatility level, which is insane. So I think anyone selling calls above the market and collecting a very healthy premium, they took a lot of risk on, because obviously you could have easily got a rip your face off rally, and stock could have been up 8%, which was what was implied. But it feels at this stage, that anyone who was selling calls above the market is pretty good about the premium that they've collected in Nvidia. But I wouldn't think that. Maybe we get a bit of downside, and I mean that would probably offer you a buying opportunity. The stock's trading on 20 times forward, price to sales, which is right at the top end. So I think I think if you don't hold the stock, which a lot of people do, you'd want to see a little bit of a pullback. Get it down to a more compelling sort of price earnings or price to sales phase, and buy back in, because for me next year is looking pretty good for Nvidia.
Yeah, it sure is. All right. Well, Chris, I'm gonna switch topics over to the Trump cabinet or Trump administration, and I want to talk a little bit about the hang-up that we're having right now in the Trump administration, not necessarily us, but Donald Trump and his administration's having. So the market was pretty dead set on thinking that Bessent, thank you, was going to be our next Treasury Secretary. But apparently there was a lot of infighting in the administration, a lot of jockeying around. It seems like he's less interested in Bessent, and now we have FOMC, previous FOMC Governor Warsh is potential Mark Rowan from Apollo, and then we have this other contender that spent the last couple of days traveling to SpaceX with him, which is a senator from Bill Hagerty from Tennessee, who seems to have emerged out of nowhere as the front runner. Now, it's hard to draw a conclusion exactly what the dollar is going to do, but I do think that the Treasury Secretary position is the most probably coveted from an economic standpoint and how the dollar is going to trade point of view. And I think the market seems like it's poised. We were really, dead set on Bessent, and then, the dollar was strengthening. I was playing the dollar to the long side. Then because his name kind of slipped, he didn't get the nod, at least not yet. The dollar slipped. Maybe that's part of it. I'm not really 100% too sure. But I think that once we get this Treasury Secretary, we're going to have some sort of decisive move out of the dollar, and maybe even equity markets as well. I'm looking right now, obviously, at the 105 level in the euro and the 106 level in the euro. Those are the two levels that I really care about at this moment. We will talk about the euro's chart here in a few minutes, because I think Chris brought it up here today. So make sure you all stick around for that. But Chris, I wanted to see, did you have any opinion on this waffling that the Trump administration is having? Oh, and by the way, he did mention that one of the main reasons Bessent wasn't maybe the lead here is that he wanted to make sure he had a Treasury Secretary that kept the party going. So in other words, made sure that stocks continue to go up, because that's how he does measure his success. So what are your thoughts here?
Yeah, I mean, it sort of swings, the pendulum swings every day, doesn't it? And I think we should hear the announcement by the end of the week, if not before that. So the market can sort of work out what that person's view is and what their stance is on the dollar, and their job is obviously to look at the debt profile of the US and look at where they're going to be positioned themselves, what we call the WAM, or the weighted average maturity of issuance, and that's going to obviously a very important role in especially when obviously the fiscal position in the US is looking more and more precarious. So I think that's obviously a really important job of all the appointments. It's the one we're looking at. I know a lot of people in the crypto factor are saying who's going to replace Gary Gensler in the head of the SEC, which is probably imminent as well at some stage. But Kevin Warsh he's got an amazing CV. Some people wanted him for the head of the Fed before gig. So yeah, he's a very, very steady pair of hands. He's got an amazing CV. I think if you have him, the US is in a good position. Yeah, you talked about Mark Rowan. He's the FT saying he's a front runner at the moment. I don't really know his position on things like the fiscal crypto and the dollar. So yeah, I think it's a question of what their stance is, because Trump was to say I want more of a play on monetary policy, or I want a weaker dollar, which yeah, you need that Treasury Secretary to offer that checks and balance. So yeah, we'll wait to see what happens. The market, what they feel about it, but it is an important role, and I think the market will give it some credence. So you're right to bring that up. Let's bring into the crypto scene, because it is, it's what everyone's talking about at the moment, and rightly so. We've just seen Bitcoin breaking out for the new highs. It continues to make new higher highs. It's lost that energy. We saw that really impulsive post-sec, as we saw in a lot of sort of Trump trades, and it's what I like about it, Blake, is that we've seen it consolidating, and it's just sort of grinding up a little bit now. Obviously, we've seen MicroStrategy playing its part. We've seen big inflows into the ETFs, a little bit lower in the iShares ETF, but they've introduced options on it, and we're seeing that playing a big part now, because if you're buying an option in IBIT, then effectively you have to take delivery in crypto, in Bitcoin, so that changes the game as well. So you could see a lot more of this sort of gamma moves playing into the Bitcoin scene now, which just could propel it into 100,000. But yeah, for me, it's really encapsulates most conversations I'm having. I think sentiment is very, very high. The fear and greed index in Bitcoin is at extreme levels, but Bitcoin feeds on that, and I wouldn't want to be short, because the pullbacks are very minimal. People are buying everything that comes at them at the moment. So this is a good time. Can we reach 100,000, Blake?
Well, I can't wait to dig into my charts here in just a few minutes. So I don't want to go too far into this, but I think that this move that you're seeing, you're right to point out, pullbacks have been minor. So you gotta on any little pullback, I think it's one of those, you close your eyes, hold your nose, and jump, and have some good risk management.
Let me ask you another question.
The trade doesn't get away from you.
Let me ask you another question. So, all markets feed off sentiment. You want to be in a positive sentiment environment, but yeah, Bitcoin now has had, and crypto has had, so much good news priced at them. A change of regulatory regime, inflows into the ETF, MicroStrategy buying more and more. There's a whole raft of things. Trump media talking about buying a crypto exchange. There's been so much good news. Are we at peak sentiment? Are we at risk of having too much?
Oh, I think so, at any moment in time. But that doesn't mean that you should be shorting it. And like I said, if you're going to be buying it, you just have to manage your risk. I mean, I would not want to be naked long Bitcoin, any crypto for that matter, but Bitcoin specifically, because I think that's where most of the focus is right now. I wouldn't want to be naked long without any stops. So if you buy it, manage your risk, buy a little bit of a pullback. Once you get to 100, I think it's more of a decision point from there.
One for the scalpers. If you're not too far away, 100,000.
I'm sure people are, and I don't think it's a bad idea. I think there's going to be some two-way action when we get up there, but that doesn't mean that I would be on the short side of Bitcoin at all. So.
Well, yeah, I mean, it's an interesting one. I think that's going to be a big wood to chop. I think personally that, and we'll move on, but I think if this starts to get a bit of more of a wriggle on, people start chasing it again. I think that 100,000 level will act as a magnet. Whether it can break through is something, but yeah, I mean, it's going to act like a magnet. People are going to willing it on, and I think it will draw in the flows to get there pretty quickly when we get that final kick.
I can't wait to get to our charts, Chris. I can't wait to get to our charts. So let's go into the last topic, which is the dollar. And here we are, Chris, and I know we've had this conversation just as recent as last week or something very similar to this. We're at a do or die level. So does the dollar do or does it die here? And I know you're going to have your opinions, and I know you have your charts that are going to accompany those opinions here in a moment. But I am in two camps. You have what could drive the dollar higher. Whether it's tariffs, whether it's in the near term, whether it's lack of globalization or kind of a reversal of globalization, if you will. But at the same time, we have this this administration that really does want a weaker dollar at some point. So the dollar, I think, is at a really key inflection point, and I do believe that this next year in 2025, it's going to be the year of shorting the dollar. I don't know how, I don't know where. I think I know where I want to do it, and there still is more planning for me to do to get to that point. But I do think that next year is going to be the year that the Trump administration is really going to try to administer a weaker dollar in some way, somehow, some sort of accord. I don't know what it is, Chris, but I know everybody's mother's, brother's, uncle's monkey is trying to buy the euro as it gets to parity. And I'm just wondering, do we even get close to that? So what are your thoughts on the dollar moving forward, Chris?
Yeah, I'd love to see. I mean, I think you're right. The market is now quite long of dollars, and some of that dollar length has come out to an extent. A little bit of heat has come out, but it's still there. I mean, I think the dollar deserves to be where it is at the moment, and I don't. To see a marked reversal in the short term, something definitely has to change. And I think it probably has to be some of the data flow that we're going to be seeing. I mean, we've got the payrolls number in, I think it's the 6th of December. We saw a weak one last month. Do we get a weak one? That would be a dollar negative. Obviously, we've got PCE coming up then on the 28th. If that was slightly lower than expected, good for risk. Bad for the dollar. Obviously, we've got some of the news flow, data flow going into December CPI. I think all these factors are really interesting. But I think to get a markdown, you need to see a change in the data flow, and that would drive dollar outflows, because you've got that sort of that relative economic advantage, and that's still supportive of the dollar. The Citi economic. US Economic Surprise Index is at year-to-date highs at the moment, showing that data has been consistently better and improving. And I think that's just such a supportive factor. So I'm in two camps as well, Blake, and I think that probably means we're in for some consolidation and some sideways range chop. That's the way that I'm thinking about it. There are obviously three ways that a market can go. It can go up, down, or sideways, and I probably, I'm going to actually say that I'm probably sitting in the consolidation sideways camp in a lot of the dollar pairs at the moment. I mean, you could have something like dollar stocky, which is pushing year-to-date highs. I think that's still going to go higher. But I think if you're looking at the dollar index, euro dollar, cable Aussie, I think you're probably risk it of a sideways move more than anything else, which you can adapt and you can range trade that. I think that's probably the higher probability for me now. Yeah? Okay, let's look at it on the charts. Let's go to, that's the setup. Right, hit me. Let's go euro dollar. Let's bring it up. Bang. Right, where's the chart? Yeah, there we go. Look, this is where I'm seeing that consolidation, because, I look at this on a rate story, right? And if I was to overlap, what's priced in Europe from the ECB over the next 2 years, and what's being priced in from the Fed over the next 2 years. The actual fair value on euro dollar, if you're just taking a very simple overlap and a fair value for euro dollar, is at 106 at the moment. So we've got a little bit of geopolitical angst being priced in. Obviously, we saw headlines that the Ukraine is firing missiles into Russia. UK produced missiles effectively, and we did see euro dollar trade into the low 105s. But I think realistically, a lot of what we're seeing from that side is the market will probably see that as noise as we go into January. Well, at least we hope it's noise, but that's kind of where the market's anticipating that. But from a rates perspective, euro dollar should be trading close to 106. And I think that we're for now, I'm probably looking to trade a range of 106 to 105 down to those lows. The price will do what it wants, and we'll respect that if it breaks out. But I think right now, we can see that the market is in a bit of a battle last few days, and it's a pretty short-term factor. But I feel that the market's well supported at 105, and people are looking to sell rallies on the pair as well. So I think the daily setup tells me, and you can trade within that time frame. 106 to 105. I think in the short term, looking to range trade that.
Very good, Chris. Thanks for bringing up the euro, and I like it. And we just turned from 106 literally less than 24 hours ago, which is crazy, right? That's how fast this thing's moving. Now it's not moving as fast as Bitcoin. So let's talk about Bitcoin. And you guys are not. You've seen this chart before. We've talked about it. When Bitcoin was trading in the $50,000-$60,000 range, we talked about a big cup and handle. Well, now here we are. We're getting really close to the 161% extension. Now that is the 161% extension of the highs from November of 2021 to the lows in November of 2022. The 161% extension is the same at the same level as the distance of the cup and handle target. Now, if you don't know how to reach a cup and handle target, you just take the top of the cup, bottom of the cup, take that, measure it from the bottom of the handle, and it takes us right to 103,000. So 103,000 is where the cup and handle completes. The 161,000 or 101,000 is the 161% extension. So, Chris, just above 100,000, we are going to start to see some two-way traffic, I think. Now, that doesn't mean that this is the top or the high of highs, but I do think you're going to start to get, as you pointed out, some slowing of the momentum. You're probably going to see some backfilling. Peak sentiment's going to start to weigh on it, and you're probably going to get your dips to the 80,000 level, or hopefully, if you're lucky enough, maybe to the $75,000 level to reload for longs. But we are getting close to completing these patterns.
Yeah, I was looking at the same cup and handle earlier, and I think it's a really good pattern. I think it's a good probability, a great way of looking at behaviour. There's so many of these other patterns that you're seeing. They're all suggestive of a technical target north of 100,000. That to me where the probabilities lie at the moment. Yeah, obviously, as we talked about there with euro dollar, you can only look at things in probabilistic terms. Do you see a high probability of it going higher, sideways, or down? And that's what the options market tells you is how to think in probabilistic terms. Ask yourself, where do you see the probabilities lying at the moment? For me, it's still to the upside. I think 100,000's an optimistic target, a good target. Just above those levels is the cup and handle target's a good one there. So that's the way we're seeing it. Anyway, let's bring it into MicroStrategy, because it's absolutely gone bananas, and you can have a look at the MSTU, which is the two-time leverage play on MicroStrategy, which is going even, I think it's up 336% since the US election. It's up 900% since the beginning of the year. And again, it comes to these ideas: do you want to go and play Bitcoin, or do you want to go and play these highly leveraged plays? Because Michael Saylor at MicroStrategy, I think he's got about $16 billion of exposure on his balance sheet, and he's got his critics. I think he's a baller personally. I mean, I think anyone who rolls the dice and has that much conviction. I know he's no diversification. They are a Bitcoin treasury company essentially now, but he's accelerating the rollout of the notes. And he's buying more. He's literally just dumped the house on it, and I love that. I like proper hardcore risk taker. And look at the way the market's rewarded. I mean, they are an incredibly high beta play on Bitcoin. They're a high beta play on the equity market. They're 2 times beta to the S&P. The question is how would you chase it now? I mean, again, it's hard to do so. But yeah, I mean, if you think that the Bitcoin price is going to go up to 101,000, then yeah, you probably say MicroStrategy's got some still further upside in this. But this is a GameStop. This is an option-driven move now. There's so much optionality on MicroStrategy. Everyone's buying upside calls. Share price goes up. The market makers have to hedge their gamma and delta. Bang, share price goes up even more. It's a perpetual move. It's similar to what we saw in GameStop, but this has actually got that fundamental backing of having the assets in the balance sheet as well. Well played, Michael Saylor, in my opinion. This is something that everyone's looking at the moment. People want these crazy moves. That's what the punters want, and this is getting a lot of attention at the moment. So yeah, if you haven't looked at it, this is still something to put on the radar.
Conviction, baby. Conviction. I love it. All right, Chris, I'm going to take you over to my last setup, my second setup, which is silver. And it looks like we need a little bit of a polish here because it's not keeping up with gold. And I've had so many people today ask what is wrong with silver. Gold was up today. I'm like, look, we had a flare up in Russia, Ukraine. I know I call it a flare up, but the word nuclear has been thrown around a little bit too loosely over the last 24 hours, what have you. Yeah, of course, gold is going to outperform silver. And frankly, if this wasn't happening and the dollar is as strong as it is, I think gold would be a lot lower than it is right now. But the fact of the matter is silver is not performing well with gold. And if we do see a turn lower in gold and we see the dollar do what Westy's talking about, and maybe the euro drops below 105, there's a good chance that the silver market, while we're below this 50 DMA, you can see it, it's right up by 3170 or so. So any move up towards $32, probably going to find some sellers. And if it drops below 2970, which is a 618 Fibonacci ratio of the whole last up move, I think we see the 200 DMA, which is just below $29. So I think if you're bullish, you need to be defensive right now. And if you're a bear, I think I gave you a couple levels you can look to play into.
It's interesting. I saw on Polymarket, the betting exchange that everyone was talking about through the election. You can now bet on whether a nuclear weapon is going to be used this calendar year. I think you can get that at the moment at 9 at 11. So effectively, there's a 9% chance, that a nuke's not going to be used. To me, I think that's free money. You get a 9% return for the year. But it's crazy what you can bet on these days, which. Take it or leave it.
That is crazy.
There's always something, isn't there? But anyway, let's go to play of the day. Right, I'm going to go for Bitcoin versus Ethereum. I know it's had a good run, and I'm going to say sorry. I'm not sorry because I know a lot of people say, well, why don't you just go long Bitcoin? Yeah, I'm fine with that. But the other way to play that, if you want to go for a sort of a lower beta strategy, which of course a lot of people don't. People just want the straight out move. If Bitcoin's going to go up to 100,000, just go long Bitcoin, or go long Microsoft, or go long IBIT options and buy calls, and they're expensive, but you can do that. The other way to look at that is to be long Bitcoin, short Ethereum. You can see the absolute dominance that Bitcoin's having. I mean, I think Bitcoin's dominance in the crypto scene's running 60% at the moment. That just goes to show that so much flow is going towards Bitcoin. It's got all the tailwinds at the moment. So I like the idea. I think it's fine to be long Bitcoin. But I think there's a place for more tactical sort of expressions as well. If you want to reduce the risk in this situation, which is kind of what I'm looking at in this my play, still remaining long Bitcoin, short Ethereum. I've been doing this through various other structures, long US equity market, short European, and that trade, is still working quite well. But I think if you believe that, if you want to trade the Bitcoin dominance and the outperformance, which I still think is the case, I think Bitcoin long, short Ethereum as a pairs trade is a good one. The other way of looking at this as well is that, if you're trading as a CFD, then you can offset the swaps that you pay on the long by getting paid 10% by being short on the Ethereum. So you reduce the swap leg as well. So that's quite appealing to an extent.
That is, and I think these pairs trades are great because the way I'm looking at it, Chris, is how many people didn't want to pay up to buy Bitcoin when Bitcoin was running higher, and they bought Ethereum, and they've been sitting there with looking at Ethereum not doing much. So there's that too. Especially if you start to see a pullback in the crypto space, Ethereum could continue to outpace to the downside, and this would go up. Yeah,
exactly. So you don't mind Ethereum going up. You just want Bitcoin to go up at a faster pace. And if both drop, because heat comes out the crypto scenes, that's what we say. Get a sell the rumor. By the fact, sell the rumor playing out in the crypto scene as some of these Trump administration people come in and get announced. You just want Ethereum to fall faster than Bitcoin, and therefore you can still make money in that situation.
Right. That's what I like about it. So anyway, a great setup, Chris, and play of the day. I like it. So my play of the day is going to remove the dollar out of this equation because I think the dollar is a little sketchy for the next week or so as we wait for who the Treasury Secretary is going to be. So I'm actually going with the Aussie Kiwi. This is a little cocktail mixer that we got going into next week. So next week, I believe Wednesday morning, correct me if I'm wrong, Chris, Wednesday morning, you're going to have the CPI out of Australia, which could run, a little hot, like we've seen CPI data running hot pretty much globally, more so than expectations. That might take us to 111 on the Aussie Kiwi, which is a big long-term triangle trend line that spawns all the way back from basically the end of 2022. I'm looking to be on the short side. I don't have a position yet. I'm looking to be on the short side near 111. And then right after that, we're going to have the RBNZ. Now, the market is thinking the RBNZ is going to deliver a rate cut, but maybe they deliver another cut, maybe aggressive, and then it's one and done. Perhaps they don't deliver a cut. Maybe they just come in more hawkish than expected. Anyway, I think the 111 level is going to be very, very pivotal, and it's a good risk management play. And then obviously you can always do a stop and reverse above 111 if you get strong Aussie CPI and a really dovish RBNZ. Next thing you know, you got an Aussie Kiwi trading at 112. So I think that's a pretty key level that I'm going to be playing off going into next week, Chris. And there is my play of the day.
Good setup. Like it. Very good. Very good. Anyway, thank you, Mr. Blake. Thank you for watching, everyone at home. And we'll see you back next week for more of the trade-off.